have to tap those savings if the price increases keep coming, if you continue to have to pay more for food and at the gas station, remains a question.
Well, the great surveillance tradition, we begin our shopping somewhere in the vicinity of 2 p.m. December.
Oh, is that right?
23rd as well.
On air.
Futures advance up 21. Stay with us.
With the First Word News, I'm Leanne Gerrans. Over in the US, President Joe Biden will give a speech on the economy and the fight against inflation tomorrow. Markets are waiting on the president's decision on the next Federal Reserve chair and a possible moves to bring down energy prices. The White House has said the announcement on the Fed will come before Thursday. In China, the central bank has signaled possible easing measures to aid the economy's recovery. In its quarterly monetary policy report, the People's Bank of China removed a few key phrases cited in previous reports, including sticking with, quote, normal monetary policy. Nomura Holdings says it expects Beijing to significantly step up monetary easing and fiscal stimulus. Bloomberg has learned that the energy drink maker Monster Beverage is exploring a combination with Constellation Brands, the brewer of coronavirus. Monster, which has Coca-Cola as a major shareholder, has a market value of $47 billion. Constellation is valued at $44 billion. The exact structure of the potential deal is not known. The US private equity giant KKR has offered to buy Telecom Italia for $12.2 billion. The bid is a 46% premium to Friday's close. KKR's offer is likely to be opposed by Telecom Italia's biggest shareholder, Vivendi. The company's shares have lost half their value in the last 5 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time that
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Up front, when your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
I think all companies, individuals, and countries need to understand the impact of AI and what can and need to be done. And I give autonomous weapons as the most obvious example that countries need to look at.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
There's no lack of clarity that if you've been vaccinated with a primary vaccination with an mRNA vaccine, either the Pfizer or the Moderna, 6 months or more ago, get boosted. And the same with regard to J&J. If you were vaccinated 2 months ago, get boosted. And we really hope that people go out there and utilize this very important tool to optimize their status with regard to protection.
Dr. Fauci, ABC This Week, we thank them for that. Driving the story forward here, Pfizer drives the story forward moments ago, 100% efficacy in long-term analysis, this on the teenage vaccine, 12, 13, 14, and 15-year-olds as well. We'll have much more out that. That's just out here as well, just further research along the way. Lisa Bramowitz and I channeled each other this weekend, and that is that we looked at the percent vaccinated in America, and then you compare and contrast with other nations, and it is absolutely stunning. Hugely regional, hugely distinct. Lisa, 59% doesn't get it done, does it?
Well, 59% doesn't get it done, and yet we're not talking about lockdowns. And Austria is. The idea that Austria is having another nationwide lockdown that's spurring violent protests with 64% of its population inoculated. This, to me, is mind-boggling. Over in Germany, the rate is 69%. In Southern Europe, it's even greater. Why is the discussion about the wave in Europe, and is there no discussion about the United States? Joshua Sharfstein has been joining us for this point and many others over the past months, Vice Dean of the Johns Hopkins Bloomberg School of Public Health. Dr. Sharfstein, what do you make of this?
Well, I think a lot in public health is compared to what? So where we are now is not at all good. We have still 1,000 deaths a day, but compared to where we were a few months ago, things are getting better. People feel a little bit more optimistic in different parts of the country. People, on the other hand, feel like we didn't have mandates, and now I either have to get a vaccine or get tested for my job. That seems like an imposition. But if you compare that to what's going on in other countries where people are countries are taking much more stringent measures, you realize that what we're doing in the United States is actually pretty reasonable.
Well, but Dr. Sharfstein, can we just take a step back? I mean, yes, there is this sort of messaging aspect of this, but why is it that the United States is not facing the same kind of wave that we're seeing over in Europe, even though the vaccination rate is so much higher in Europe?
Well, we had that wave in many parts of the country, and it really depends on the region, like you said. So, Mississippi's had that wave, Florida's had that wave. It was terrible. I mean, we were building intensive care units and hospital beds in parking structures. In other parts of the country, though, the vaccination rate is so much higher than in those parts of Europe that are having problems. We just are not seeing the surge in cases.
Dr. Sharfstein, we had the plague wash through the Keene household over the last week, just your common cold and all that. And one of the cherubs had to be tested just to be sure they're okay and they're fine and all that. Can you tell if you have COVID? If somebody gets a cold, can you say, ooh, I think it's COVID?
Well, it's a good idea to get tested, so you did exactly the right thing. The symptom that is the most distinguishing is the loss of smell. So if you lose your smell, then you have a pretty high likelihood of getting COVID. But if you don't lose your smell, you could still have COVID, and that's why it's important to get tested.
Yeah, that was very good, Kaylee. I didn't lose my smell of juniper, so it worked out okay.
I did. I couldn't taste anything for months. It was horrible.
Yeah, well, we'll have to see. I looked, Dr. Sharfstein, at where we are on this, and the question, as Lisa brings up, is 59%. What's the plan to get to just at the margin 62 or 63%?
Well, I see that plan in action in Baltimore, where I go out and vaccinate as a volunteer with the health department, and they are focusing using maps on neighborhoods where there's still a lot of people who are unvaccinated. They go door to door talking to people. They set up little vaccine clinics right there, and they're continually getting more and more first doses in. The other major strategy is to, rely on requirements for jobs where it really matters for people to be safe in the workplace, given the nature of the work. And I think sticking with that for hospitals, nursing homes, and many other employers that are going to potentially be at risk for outbreaks makes sense too. And there are a lot of people still who show up to get vaccinated, and you ask them why it's taken them so long, and they go, I don't know, but now I have a job requirement. And they're not all that bent out of shape about it. They just know it's something they have to do.
Okay, so Dr. Sharfstein, given current vaccination levels, given, as you said, we saw a surge prior to Europe's fourth wave, does that mean this winter actually won't be that bad, given natural immunity and then actual those who are immunized?
Well, that's really the big question heading into the winter. I mean, I think it's predictable we'll see more cases than we have been seeing in places where people are going indoors, but will it really lead to more hospitalizations in a very serious way that threatens the healthcare system? The projections, some of them are very confident that we won't see that kind of crisis, but you never really know. And I think what we've learned with COVID is until it happens, you're not completely sure, and the best thing is to take precautions. I think that obviously getting everyone vaccinated now matters. And when people are in close quarters with others who may not be vaccinated, wearing a mask for the winter, I think, is sensible.
Joshua Sharfstein, thank you so much, with Johns Hopkins this morning. Lisa, I'm going to get back to the markets with a nice lift in the equity space. I guess retail earnings coming out. Dana Telsey really enthused, as we heard from Steve Sadov, on the retail season. Lisa, the two-year yield, 0.53%. I'm going to call this stasis in yield. Am I right?
Yeah, there isn't a material move up in yield, which is notable. We already had the move. Even if you have Fed Vice Chair Rich Clarida, one of the big talkers, one of the big voices and influencers on the Federal Reserve, coming out and talking about accelerating the tapering program, that didn't move the needle that much in yields, because he basically was edifying what the market was already saying.
And the real yield, negative 1.09, make it a negative 1.10. Yeah, it's a little lesser negative, but Kaylee, it has nothing to do with the path JP Morgan framed out this weekend of a substantial lessening of that negative real yield statistic. And we're miles away from that outcome.
Yeah, we're miles away from it. And the question is, does that keep giving fuel to this equity market? Because regardless of what's going on in nominal yields, the equity market has seemed quite immune for some time, and that is because real yields have stayed so steeply negative. That continues to aid risk assets. So when that equation changes, does it make harder for equities to roll on, or are the bulls just going to keep being out in force?
Let's rip up the script. Lisa, headlines out from Angela Merkel on the Germany you were just speaking about on COVID. And I look at James Burns Murdoch's statistical work at the Financial Times, and it doesn't dovetail. Germany's numbers aren't that much different than the United States numbers on deaths. And look at that headline. Could you imagine Biden says American COVID situation worse than anything so far? It's like, it's like two different worlds.
And that the COVID situation is, quote, dramatic, and this is the key, tighter curbs are needed. Are they going to enter some sort of lockdown akin to what we're seeing over in Austria? I got to give you a victory lap, unfortunately. I'm usually Debbie Downer, Tom, and I was optimistic about the idea of herd immunity. I was optimistic that we would get to a certain threshold of people vaccinated and everyone would be happy. You pushed against that. You were right. See? Sometimes it pays.
The math here, there's a complexity of math here that the media doesn't pick up on. And the bottom line is the goodness of fit is out at 80%.
Yeah.
Something plus or minus that. That's too much math for Monday morning. Stay with us. Wednesday, a statistical onslaught. This is Bloomberg.
严状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力，都有的啊，但是要看怎么一个结局。说我们不做任何挑衅啊，但是说把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判，它全面啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree, we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The call on the Fed really is the derivative of the call on the U.S. economy.
Anybody who says that they can nail down an inflation forecast over the next year probably has too much confidence.
It's unsurprising that economists are sort of all over the map.
There will be significant fiscal drag in 2022.
Probably things won't be quite as rosy, or people won't be quite as optimistic going forward about economic prospects.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A simulcast, Bloomberg Radio, Bloomberg Television. Farrow off. He's so off, we had to beg Kaylee Lyons to come in. We're thrilled she could join us this morning. There are so many confusing stories this morning, all centered on the president to Nantucket. Lisa, does he pardon the beasts? Have the turkeys already been pardoned?
Are we really doing this? Did you see the pictures of the turkeys that are going to be pardoned on hotel beds?
They're like at the Hay Adams. Yeah, I couldn't believe it.
I saw that. All right, can we move on? Okay.
We're going to move on from that. Where we're going to move to is the dovetail of markets into the global response to a pandemic, now pushing 20 months old. Futures up 20, now up 14. And Angela Merkel, Lisa, I'm sorry, she moves euro.
The idea here that she came out and she said that there probably will be new restrictions necessary to control the wave that she says is dramatic, that she expects the tighter curbs imminently. I am looking at this. Frankly, I'm surprised that markets aren't moving more. Yes, you're seeing the euro respond, but pretty much everything else shrugging it off. This is going to be a blip on the way to recovery. Remember when people would worry, Tom, about the idea that perhaps we would see a third, fourth, fifth wave? Well, that's not what we're seeing in markets right now.
And what we see in markets is a recalibration to a new productivity. Tracy Alloway in Bloomberg Business Week writing up Goldman Sachs optimism on productivity. And Kaylee, you see it across markets, and vaulting into December, it's still a great bull market.
For the equity market, I think it's interesting that you're seeing all these concerns around COVID playing out in the FX channel, but not so much in equities. And obviously what the FX market is worried about is any kind of concerns from growth. So does this continue to feed into that idea that the equity market isn't completely disattached from what is actually happening in terms of the economic outlook, given you still have liquidity, earnings are still solid, the bull market keeps rolling on?
It's a holiday length in Worth Creek here. And Lisa, the economic data that we see will be extraordinary. Let me go to futures here, up 20 now, up 15, the VIX 18.14. I'm going to call it an equity churn with some enthusiasm here, even small caps doing better. 10-year yield 1.58%. And we're noting euro 115, 114, 113, weaker euro 112.74, and that bears watching, bouncing off a 112.60 level earlier this morning. Oil not part of the story right now. Lisa, you've got a brief, and it does center around economic data.
It does center around economic data, but I want to just make a point on what Kayleigh was just talking about, the idea that we're seeing the weakness of the potential additional restrictions over in Europe in bond markets, in FX markets, not in stock markets. Why? Because some of these low yields are what's underpinning the dynamism that we're seeing in equities. If you take a look, some people have accused me of being bullish. That really, I mean, God, I don't know how that they came to that idea. But there is a difference between an economy that's growing very quickly and gaining momentum and an economy that still is under the thumb of central bank policies. And those are two very different realities with potentially the same outcome for an equity market. All right, 10 a.m. U.S. October existing home sales are expected to decline just a bit. This is seasonal. They're not expected to decline as much as usual. And this, I think, is what's going to lead a lot of people to think we're going to see even more housing starts, which we've seen already explode over the past year. Then at 11:30 a.m., we get a $58 billion sale of 2-year U.S. Treasuries. Very interesting to see what the demand is like, given some of the rate hike expectations that have been brought forward. And then at 1 p.m., $59 billion of 5-year notes being sold as well. This is actually more interesting to me, given the idea that people are now pricing in a greater number of rate hikes in this cycle, not just a sooner liftoff cycle. Then at 6:10 p.m., Atlanta Fed President Raphael Bostic is planning to join Bloomberg Television. How much does he reiterate what we've heard, Tom, from Fed Vice Chair Rich Clarida, where he came out and said, we may have to accelerate the taper. We're going to be watching the data very closely between now and our December meeting. This is going to be an interesting one. It's not going to be the same old.
And very importantly, folks, for for Powell, I should say, Powell Brainerd, the date calendar is today, and great focus on tomorrow, as well as the president then migrates to Nantucket with his family for the holidays. We will not migrate to International Falls, Minnesota, the low Thanksgiving Day, 6 above zero. Jim Paulson knows that and joins us today from the great state of Minnesota. Jim Paulson with Luthold Group. Jim, your note is one of the clearest, best statements I've seen to calm down. You did the heavy lifting. You went back to 1982 on inflation. You said, what happens if we do get elevated inflation? And then you brilliantly dovetail it into a savings level at a 1978 level. This is a clinic, folks. Jim Paulson, why should we calm down?
Well, you know, I did. I went back 1982 and looked at the Atlanta Fed's 10-year forward consensus inflation expectations and kind of asked the question, you know, how does the economy do when inflation expectations are higher or lower? And we're worried about them being higher right now. And what I found, Tom, was that most everything in the economy, real GDP growth, real disposable personal income growth, consumer confidence, job creation, profitability, all of that does better when the inflation expectations were 3% or above than they do when it's 2% or less. And it's interesting because the Fed's target, of course, is 2%. And the whole idea is to bring inflation back to that level. And what the reality is when you look back historically, economy's done worse when we tamp down inflation expectations to that low level. We can't handle runaway inflation, certainly not 6, 7, 8% inflation. That'll be disastrous if it sustains. But if we fall back to, let's say, just 3% rather than go all the way back to 2%, that might actually be a good thing. I think depressing inflation too much can depress, I think, animal spirits, and it can lead to too much pessimism and concern about the future, which leads to conservative economic behaviors. Maybe a little higher inflation could actually stoke animal spirits a little bit and lead to better economic outcomes. So part of our fear of remaining at higher inflation might not be well placed.
So this actually is going directly to the Adam Posen school of thought from the Peterson Institute, where he's saying that perhaps this Federal Reserve ought to rethink what their target is for inflation, and then actually they should move it and allow it to move to more of a 3% rate. What does that do to the bond complex? If we're talking about negative real yields, does that mean that they just go more negative and that the Fed has to remain that much more accommodative to achieve that?
Well, I think ultimately, I guess what I've looked at on the bond yields is ultimately, I think if we sustain, we've been sustaining at 2% inflation, and we've had kind of peak outs in yields of 3% on the 10-year. And I think what we're going to end up, if we sustain more at 3% in this cycle, ultimately the 10-year yield's going to hit 4% or a little more at some point. And that would be, so even the funds rate, you could look at end of cycle funds rate might be close to that as well before the end of this cycle. And again, we're a long ways from that. It could happen very quickly.
Wait.
I still think we're maybe going to see 2% before the end of the year yet on the 10-year if these inflation numbers keep coming in hot.
Kayleigh, can I ask you a question? Honestly, do you think that equity markets could sustain their valuations with a 4% 10-year yield?
Given 1 3/4% spooked the equity market earlier this year, I would say probably not, especially some of those more richly valued areas like tech. But Jim, I'm stuck on 2% by year end because, yeah, that's what we all thought coming into 2021. We've remained at least 25 basis points south of that, 40, more than 40 this morning. Get me there. How?
Yeah. Well, first I'd say, 4% could kill the equity market. I agree with that, but I think it's a ways off. And yeah, I think the market can handle rates below 3% probably pretty well here, particularly with growth doing as well as it can. In the short term, however, I am a bit concerned that we could head into a period here where COVID is knocking down economic growth again, and economic reports roll over. At the same time, we're still having supply chain inflation pressures. And if we get a combination for a few months of higher inflation reads at the same time that we have economic surprises roll over more negatively, we could have a pseudo stagflation feel that could be difficult for the stock market, particularly if bonds respond to that by heading higher at the same time growth is weakening. I don't think it'll persist, but it could create a correction.
Jim, quickly here, can you frame double-digit returns for equities next year?
My feeling, Tom, is my best guess at this time is we're going to hit around 5,000 on the S&P sometime next year. But I also think we're going to have maybe a 10 to 15% correction before we do that. I'm looking at $220 earnings at the end of this year. We're at about 210 on estimates right now, and I think it's going to be 220 by the time it's done, and 240 next year. And the average multiple right now, Tom, over the last 30 years is 20.7 times earnings in the last 3 decades. If I put that number on a 240-ish, we got a 5,000 S&P as kind of a mean level next year, and I think we might see that. I think we're going to have a pretty nasty correction along the way.
Jim Paulson, thank you so much. Greatly appreciate that with Leuthold Group. And Lisa, that's the statistics everybody's playing with, and the Bulls and the Bears spoke out this weekend as well.
Yeah, and frankly, it's all over the map. The one consensus is a lot of people say that it's going to be rockier, certainly in the back end of next year. Actually, some people say it's the front end. Some people say that it's the back end. Nonetheless, all over the map when it comes to projections, yet there is this feeling that the Fed may be more patient and that they may let inflation run hotter for longer. 4% Treasury yield. What would that do to equities?
Well, yeah, that is an outlier call. I mean, let's be clear here. Yeah, I think, yes.
I mean, given what we saw from Bill Dudley as that as a sort of base Fed funds rate, and that we heard the same from other former Fed officials, can this gain traction? What does that do?
I think that it's one of the scenarios out there, but 4.00 is a lot different than 3.25. We'll have to see. Kayleigh Lyons in for John Farrow today here on radio and television. Lisa Bramlett and I getting you to a Seattle slew of economic data on Wednesday, a stunning day Wednesday as we squeeze in all that weekend data as well. And then on to December and the jobs report. Please stay with us with futures up 15. This is Bloomberg.
With the First Word News, I'm Laura Wright. In suburban Milwaukee, Wisconsin, an SUV has sped through barricades and into a Christmas parade. At least 5 people were killed and more than 40 others injured. Police arrested 1 person. They are not saying anything about a possible motive. A police officer did fire his gun trying to stop the vehicle. The Kremlin is dismissing U.S. claims that there is a Russian military buildup for a possible invasion of Ukraine. A spokesman says Russian troop movements on its own soil don't pose a threat to anyone. He accused the U.S. of trying to increase tensions with its allegations. Pfizer says that its vaccine proved 100% effective against coronavirus in 12 to 15-year-olds. Pfizer and its partner BioNTech are reporting results from a longer-term analysis of a phase 3 trial. The data is also being submitted to regulators in the US and elsewhere as the company seeks full approval of the shot. Former bankers at Credit Suisse have told investigators the bank still helps U.S. clients hide accounts from the IRS. That's according to a filing in a civil lawsuit. In 2014, Credit Suisse paid $2.6 billion in penalties and agreed to stop the practice. The bank says it continues to cooperate fully with the authorities. The U.S. private equity giant KKR has offered to buy Telecom Italia for $12.2 billion. The bid is a 46% premium to Friday's close. KKR's offer is likely to be opposed by Telecom Italia's biggest shareholder, Vivendi. The company's shares have lost half their market value in the last 5 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Do you think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one-directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There's no question inflation is high, and it's affecting American consumers, and it's affecting their outlook. This bill is going to be the biggest cost-cutting bill for working class and American families in decades in this country, and it's going to go at costs that are persistent problems for the American people in their lives.
Brian Deese, National Economic Council Director, there with Chris Wells on Fox News. We thank Fox News for the video. We also thank Jet Fitzpatrick joining us. Let me do the data first, though, before we get to Jack. Futures up 14. They're up about 20. And then Angela Merkel talked about virus distress in Germany, brought the futures right back. Dow futures up 97, the VIX 18.10. Lisa and I watching Euro 112.76, weaker Euro through the day. Jack Fitzpatrick on Thanksgiving. And Jack, I would suggest any first-term president, maybe it's a different first term for Biden, does a recalibration around the conversations of the holiday season. Are we going to see bodies move in and bodies move out at the Biden administration as we wander into January?
Well, the most obvious answer to that would be that heading toward Thanksgiving, the president is supposed to speak on the economy tomorrow before taking a little break for Thanksgiving and going to Nantucket. And there's the expectation that before Thanksgiving, maybe in conjunction with tomorrow's comments, he's going to talk about who will be confirmed, whether reconfirming Jerome Powell or confirming Lael Brainerd to head the Fed. Outside of that, I am not sure if we've gotten to the point where inflation concerns would lead to people being on the outs in other economic positions. But that's sort of the point of focus right now in terms of the cost of a Thanksgiving dinner, what people are saying about the state of the economy. I think in terms of personnel decisions, there's a lot of focus, at least in Washington, on the Fed position.
But Jared Bernstein is not going to make or break the president and the Democrats in the midterm elections. What is the political debate you detect over rising inflation?
A lot of the political debate over rising inflation has probably focused maybe disproportionately on this upcoming bill in Congress, the social tax and spending reconciliation bill. Of course, when the Congressional Budget Office score came out, it showed something that could definitely imply an inflationary pressure based on the way the spending is front-loaded. Even if it is close to paid for over 10 years, the first 5 years would add about $790 billion to the deficit. I would say that seems probably to have a disproportionately small effect on inflation compared to everything else happening with the reopening of an economy, supply chain issues, the overall fiscal aspects that the government has taken over the last year and a half to try to push up demand. But it tends to get funneled into a focus on the legislation in Congress and the key legislation that the president has looked for, even though that's not necessarily the main reason we're seeing inflation.
Jack, are there any legislative consequences of President Biden's approval rating falling to a record low of 41%?
It's a bit surprising that there haven't been concrete consequences just yet. When we're talking to lawmakers, you get the sense that maybe those negative poll numbers have an effect on this upcoming bill. It probably has an effect on other legislation they need to get done after this bill. It would be the time for someone to pump the brakes on the Biden administration's legislative agenda if they wanted to. The question, though, is if Senators Manchin and Sinema really want to say no to a deal. And so far, nobody has slammed on the brakes because of the poll numbers we've seen, and they've managed to at least move forward and get the initial version of this bill through the House. So it may have an effect, but it really hasn't had a concrete effect just yet.
Well, and of course, it could have an effect electorally as well as we look toward the midterms in 2022 and also 2024. A story that caught my eye over the weekend was the Washington Post reporting that Biden and his team have been telling allies he will run again in 2024. Is that something Democrats want, given how low his approval ratings have gotten?
Oh, I haven't heard from any other lawmakers doubting whether it's a good idea for him to run, and I would note that the president has said publicly that he plans to run again in 2024, but sometimes leaving a little bit of wiggle room in his statements. It's very important, though, for the president not to back himself into a corner and become a lame duck this early, especially with so much of the legislative outlook going on. If he has Democratic lawmakers believing that the whole party's future revolves around President Biden for the near term, then he has much more leverage than if people really start to doubt his reelection. So I think the reelection question for 2024 really realistically has to happen a bit closer to 2024 because the president has to be motivated to at least let people know he's still around and he's not a lame duck as of 2021.
Jack, what's the consequence if President Biden doesn't pull the trigger on actually announcing some Fed chair nominee tomorrow?
I mean, the expectations have built and built and built, and it's getting to the point where it's hard to look at this news cycle and not notice how long he's waited to make a decision. The fact that they said there is going to be an announcement before Thanksgiving, and now we know that he's supposed to give comments tomorrow, it would look pretty bad, and it would be concerning. In terms of the vote count for a confirmation, probably would be the implication.
Jack, thank you so much. Greatly appreciate it. Jeff Fitzpatrick there. Are you on a Nantucket, Jack? I mean,
no.
No, you're not.
I'm not invited to Nantucket.
You're not invited to Nantucket. Okay, I'm just wondering. There. Thank you so much. And again, we're going to have special coverage for you on whatever the announcement may be. Lisa Ibrahim-Rabari at Citigroup, he writes up and says it's simple. He predicts Powell will be reappointed, and he predicts stronger dollar.
Yeah, although, you know, it's all over the map. Mohamed El-Erian came out in Bloomberg Television last week and said he thinks that Lael Brainerd would be the best choice. I mean, frankly, it is all over the place when it comes to this selection. And at the end of the day, Tom, is there really any difference between the two of them?
Kayla, you want to weigh in on this?
Well, I think it's interesting because it's not just about who Biden picks. That person still needs to be nominated. They need the votes in order for that to actually become the next Fed chair. It's not just about the nomination. And I wonder, given some of the pushback on progressives like Elizabeth Warren, for example, on Chairman Powell, if we don't get a Chairman Powell pick, if instead it is Brainerd, do you end up with a kind of battle in the legislative branch no matter what the executive decides?
I do a little data check here as we go, and I've ignored foreign exchange today. DXY 96 is a level. Bloomberg Dollar Index elevated as well. Yen 114.09. Sterling, John Farrell 134.45. Sterling quiescent after the Tottenham victory that we enjoyed yesterday. Swiss franc comes. Thank you. Swiss franc.
Anytime.
Comes in. You should have seen it. It was really good.
I'm sure.
Yeah, you got fired up. They were terrible.
I heard that managers left and came. A lot of news, but you know, I can't really help you on it.
Thank you. This is just invigorating talk here. What you need to know is that Tots sleptwalked through the first half and came out, and they took it out of Leeds 2-1, and it was exciting. And
I bet it was.
Leading our football coverage. Tom Kane, thank you.
This is
what people need on a Monday morning.
Is it though? Is it? Is this helping anyone?
Yeah.
I tried. It failed.
Okay, we'll continue. Our futures up 13, Dow futures up 76. We do Dow futures always for John Farrow. On radio and television, stay with us. Linda Dussel on the markets next.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg surveillance, it's a 3-day, maybe a 4-day week. Who's counting? A huge economic dump on Wednesday. We'll have all of that for you. But right now, really an interesting Monday. It is a very varied story here. It's much more interesting, much more exciting than I expected. Futures up 12, really green across the screen on the equity markets. Yield space, yields are higher, 0.53% on the 2-year yield. The 30-year bond under that 2% level. 1.94%. Oil not giving me much this morning, nicely under $80 a barrel. Even a gallon of gas tipped back just fractionally a little bit of AAA unleaded statistic. Dollar giving me some excitement with a stronger dollar. Euro off the Bloomberg at 112.78. That's about all the data I want to do because we got a really good conversation coming up first. Kaylee Lines on stocks.
Well, as you said, Tom, equity futures are broadly higher, but you have some names coming back down to earth. A lot of those areas where people were talking about froth, valuations getting a little too rich. One of them being Rivian, which of course is relatively newly public. It is down about 3.2% before the bell. Lucid Group coming in about 2.5% as well. And then another meme stock, ones that have been really popular with retail traders, is Aurora Innovation. This is a self-driving car startup. It rallied 71% last week, but on this Monday morning down about 7.2%. We also potentially have some merger conversation on this Monday morning. Bloomberg reporting overnight that Monster Beverage, which makes the energy drinks that Tom drinks before the show, is thinking about maybe merging with Constellation Brands, which makes Corona, the beer that Tom drinks after the show. Not too much action on the speculation that this deal may be happening, but Monster down 3%, Constellation Brands up 2%, and of course Coca-Cola owns a majority stake or a large stake in Monster. It's a little bit higher before the bell as well, Tom.
Kaylee, thank you so much. This is a joy as we frame to 2022. We do that with Federated Hermes, and they have been absolutely spectacular on saying you have to be in the equity markets, you've got to participate, and you can do it without fear. Driving the intellectual force at Steve Auth's shop is Linda Dussel. She's senior equity strategist with decades of experience with a parchment from Wharton and an early graduate of the Tepper School of Carnegie Mellon. Linda, what was it like at Tepper when it was getting off the ground? What was the pixie dust there of that economics department dovetailed up against finance?
Well, you know, I didn't really belong there because everything was about computers. Actually, Tepper is probably one of the most in terms of the forefront in technological advances, and you know we know that with the Robotics Institute now. Of course, when I went there, that was decades ago, and I was a total fish out of water. I'm more of a thinker and not a math person. But they passed me through, so they're good by me.
They got through, and then they did excellence in robotics. And you mentioned technology and talking to your people at Federated. What I hear is the great underestimation of technology across our economics, our finance, and our investment. Give me the optimism for 2022 as we underestimate this technological moment.
Yeah, I really think that we are. And I read a lot of people are comparing now with the 1970s, and I was there in the 1970s. You did not have productivity, anything like what we had now. You had a very weak dollar. We have a very strong dollar right now. So to make those comparisons is not fair. And we keep talking about the pandemic and everything that it meant to our lives and to our investing and to technology. The technology advancements seriously were accelerated. It's gone through all the sectors of the economy. So this is very difficult for people, you know, particularly in Washington, D.C., those people that are trying to calculate measures for us to figure out what this really means in terms of good deflation, disinflation. So very good thing.
So, Linda, what does that mean in terms of what you're buying in the equity market?
Well, we at Federated Hermes are bullish as we make our way in through 2022, and so that takes us squarely into the positive for cyclicals camp. Technology is obviously a growth sector, and technology, particularly the large cap technology stocks, are used for defensive purposes. We've seen the semiconductor stocks just really do very, very well in here. That is kind of more of a safe, even value type of a look, but there's technology coming right at you. But for us in sectors, materials and industrials, which haven't had really a good go here lately, look really very well poised in terms of valuation and growth into next year. And just one more comment, if I may. We've said we think that international developed looks good. Look what's going on with COVID over in Europe, and that I think might mean that early in the year monies might continue to flow here to the U.S.
Linda, why aren't markets responding more, and I'm talking about equity markets, to the wave that we're seeing in Europe and the idea that we're seeing shutdowns reinstated?
Yeah, well, the United States is a big country. The states are all experiencing different things. We know that the South has seen their spike, and they've seen it come back down again. Here in the North, we're seeing spikes, but I think it has a lot to do with the fact that they've not counted the breakthrough cases, and now they're counting them, so it looks worse than what it is. And you just have a lot of Americans. I mean, I saw the tapes that shows the people over in Europe protesting. They're all protesting without masks on, so people have had enough of it. And, we'll see how we do here, but the boosters are now finally widely available. Anybody wants to get them. And we're seeing that the experience in terms of hospitalization and deaths are not that bad. We